business. Robin, thank you for joining us this evening.
Thank you, Donna. I'm glad to be with y'all. Thank you for the invite.
Thank you. To start us off, would you mind telling us about yourself, why you became a CPA, and the benefits of being a certified woman of business?
I'm glad to be with y'all. Thank you for the invite.
Okay.
Yes, I have some echoing going on here, but yes, to tell you about myself, you did a great job of doing the intro. But yes, I am proud, first of all, to be a Christian, and that means very much to me. I'm a mother of 4, a grandmother of 9, a daughter of my 92-year-old parents who are both still living. Thank God for that. A middle child of 7 siblings. And as you mentioned, a retired government auditor and director of audit shops for the state of Texas, and a certified public accountant, small business owner myself. So yes, when I was a little girl, we moved from Germany back to the States because my dad was in the Army. And first thing we did was went to my uncle's wedding in Baton Rouge, Louisiana. And he had an elaborate wedding. He had a beautiful home, and every time we went to visit him, he always had a lot of food for us to eat. And it just seemed like they had the greatest lifestyle. And coming from a family of 7 children, that made a big impression on me. So I found out that he graduated from college with a degree in accounting. And so I said, well, I guess I want to follow in his footsteps. So I was also good in math, and I took a bookkeeping course in the 10th grade and fell in love with bookkeeping. Wow. So that confirmed my decision to become a CPA. So that's the reason why I became a CPA. You had asked about being a certified woman-owned business. Becoming a certified woman-owned business in and of itself does not really guarantee any benefits. But what it does do is make you eligible to bid on contracts that are specifically set aside for women-owned businesses. And so that decreases the amount of competition because only certified women-owned businesses can apply for those contracts. So it gives you an increased ability maybe to get a contract, but there's no guarantees.
Okay. Thank you for that. Mm-hmm. It's the beginning of the year. What should small business owners be doing to prepare to file their tax returns?
Okay. In my practice, I have noticed that a lot of small business owners do not actually know what their entity type is for the IRS, which can be different than the entity type filed with the Secretary of State or the county. So if you're a corporation or LLC, you know you have to file for business status with the Secretary of State. If you're a sole proprietor, you have to file with the county. Okay, but that doesn't necessarily mean that you file your taxes that way. So it's very important that they find those letters that they got from the IRS when they first registered their business with the IRS to get their EIN number. Because on that document, it will tell you what type of business the IRS considers you to be. Okay, you need to know that in order to follow the correct tax return. So first of all, that's very important. Secondly, they need to make sure that their 2022 accounting records are complete in accordance with generally accepted accounting principles, and that they have all the supporting documentation for their transactions. They can also issue all the 1099 forms that they might be required to file if they had people contracting with them for services that they needed, and issue all their W-2 forms to their employees, and pay and file any employment taxes and unemployment taxes. If they've been paying their estimated tax payments, The final estimated tax payment is due on January the 17th. So they want to make sure that they file their estimated tax payments timely, because late payments get a pretty hefty interest added onto them that's compounded daily, and it increases each quarter of the year. You're supposed to make estimated tax payments every quarter. So that tax rate, the interest rate increases from 3 to 6% from the first quarter of the year to the fourth quarter of the year. So you want to make sure you pay your estimated tax payments. And also, you want to start considering tax planning for 2023. So technically, you should have done tax planning for 2022 at the beginning of 2022, because you need to make sure that you have time to implement all of the planning strategies that you have decided to implement before the deadlines to implement those strategies. So if you don't plan ahead, you won't have everything you need to be able to actually deduct those deductions that you're trying to get.
Okay. And as it relates, you speaking of deadlines, is there a different due date for small business owners to file their tax returns?
Yes, there are. It depends on, like I said before, the entity type. Okay, so the IRS entity types can be a S corporation for small businesses. Hopefully you're not a C corp, but if you are an S corp, you file Form 1120S. And if you're a partnership, you file Form 1065. So these returns are required to be filed by March 15th of every year. Okay, and in these returns, the business owner will receive a K-1 schedule, which they will use to prepare their individual income tax returns. So if you're a disregarded entity for IRS purposes or a sole proprietor, then you will file your business return with your individual tax return. And that's usually done on Schedule C. Now, if you're in real estate, it might be done on Schedule E, but depending upon which schedule you have to file for your business, those will be filed with your individual tax return. And this year, those tax returns are due on April the 17th. So you can file a timely extension by those due dates, which will give you 6 additional months to file your tax return timely. However, requesting an extension to file does not give you an extension to pay. So you're still required to pay whatever tax may be owed by the actual original due date of the returns.
And are there penalties for not filing?
Yes.
I'm sure.
You know, the IRS is not going to let us get away with that. Okay, so there is a failure to file penalty, and that penalty is 5% of the unpaid balance per month, up to a maximum of 25% of the unpaid tax balance. Okay, if you're more than 60 days late filing your return, then your penalty would be $450 or 100% of the tax due, whichever is less. So there's no penalty if you file your tax return late, but you're owed a refund. Okay, so, but
okay.
And we already talked about there is a failure to pay penalty as well, 5% of the unpaid balance up to 25%. Or you can make a payment installment agreement with the IRS, and that has a 2.5% penalty added on even with the installment agreement.
And you mentioned to make sure you know which type of entity your business is. What are some common mistakes that small business owners make when filing their taxes?
Okay, most small business owners, like I said before, they fail to have accurate accounting for their business transactions. I can't stress how important that is. So a lot of business owners, small business owners, they think that it costs too much to get a CPA or to get a very experienced bookkeeper to do their accounting for their business. However, any fees that you pay to a CPA or a bookkeeper to do the accounting for your business, those are tax deductions. So actually, it could help your business if you have the cash flow to be able to pay somebody to make sure that your accounting is correct. Additionally, a lot of times small business owners forget about keeping mileage records. Okay, you need mileage records for business use of your vehicles, commuting, and other mileage that you've driven your vehicle for the whole year. You need supporting odometer. I have problems saying that. Odometer readings or other mileage map calculations of the trip that you took with the documented business purpose for the trip. Okay. Those documents are needed if you're going to file a deduction for mileage. Also, the depreciation. You want to claim your depreciation in such a manner that gives you the best write-off for your business. This might be a year that you didn't make that much. So maybe you don't want to write off all of your equipment or do a bonus depreciation claim. Maybe you want to wait and do depreciate over the regular depreciation schedule so that you get some benefit in future years when your revenue might be higher. So also they might fail to claim only allowable expenditures. Okay, there's a book tax difference. So even though you may have accurate bookkeeping for your business on a book basis based on accounting records and requirements, there are some adjustments that have to be made to that for your tax return. And then sometimes, if they don't keep good records, they may not report all of their revenues. If you have taken depreciation on some items and you sell them, you may have to do depreciation recapture. So that's another area where a lot of mistakes are made. Or if you have to write off bad debts, you need to make sure you handle that correctly. And sometimes businesses don't take advantage of, especially small business owners, of retirement and healthcare benefit programs that they can get for their employees and their owners. You can get tax deductions for these type of expenditures, as well as you can take tax breaks for hiring your children if they're under the age of 18. So that's another tax break that a lot of small businesses may not know about.
Okay. And speaking of hiring, can you speak to us about the difference between contractors and employees? And is there a benefit of one over the other?
Okay. Really, it depends upon the circumstances of the business, what the benefit is to that business, whether it's better to have employees or it's better to have independent contractors. The reason why I say that is because employees, you can deduct their salaries and their benefits as actual deductions that are allowable on your tax return. However, if you have a loss for the year or you don't have the appropriate cash flow in order to pay all of those expenditures, then having employees may not be beneficial to you. So in one case, it could be beneficial to one small business. In another case, the same thing could be not beneficial. So it's the same thing about independent contractors. If you have the ability to pay for the independent contractor, it could be beneficial because you don't have to pay all the employment taxes related to that. All you have to pay is their fee. So it just depends. Sometimes the independent contractor's fee might be higher than what you have to pay your employees. So it's on a case-by-case basis, and in small business will have to weigh that out for themselves. But how do you tell the difference between a contractor and independent employee, and an independent contractor? Generally, it stems on who has control over that particular worker. If you set their salary, if you tell them how to do their job, if you pay them fringe benefits, if everything that the arrangement you have with them is just like you would do for a regular employee, then they're not an independent contractor. Most likely they're an employee. Okay. If you don't have that control over what they do, if you just hire them and they control how they do their work, they control within that firm or that contractor what they pay their employees, and you have no say so over how much they pay their employees. If you don't pay fringe benefits, if you don't supervise their work, if everything is totally separate, then they're going to be an independent contractor. Okay. So it pretty much depends on looking at 3 different types of areas. Behavior, do you have the right to control what they do? Financial, how's it set up? What things are you paying for them versus not paying for them? And what type of relationships do you have? Like, is it a contracted agreement? Is it an employment contract? So it just depends. But if you in any way can control the work that independent contractor does, for instance, I'm an independent contractor to the businesses that I serve. They don't tell me how to do my bookkeeping. They don't tell me how to do my audits. They just hire me to do the job. So in that situation, I'm an independent contractor. But if me as a CPA, if I was, working in their internal audit department and they, had control over what they paid me, gave me bonuses or raises, if they had their own procedure manual that I had to follow, if they told me, everything to do, supervise my work, did employment evaluations on me, and I had an employment contract with them, then even though I'm an independent CPA, I would be an employee and not a contractor. So that's how you have to look at the situation. And if there's ever a situation where you can't determine whether somebody's an employee or independent contractor, the IRS does have a form SS8, determination of worker status, that you can fill out and submit to them. And they will look at all the circumstances and help you make that decision as to whether an entity or contractor is an employee or independent contractor.
Okay. You've mentioned some aspects of record keeping and how important that is when it comes to filing taxes. Is it necessary to keep every single receipt of all of your expenditures?
Okay. As I mentioned, I'm an auditor, so I'm a little biased. Okay. So I say yes, you need to keep everything, keep all records.
Okay.
And some types of records that you may want to keep are your entity formation documents. You definitely want to keep those. Any letters that you receive from the IRS, all receipts for your expenditures, including your startup cost and your organizational cost, because those have to be accounted for separately under different rules. So you might make sure you have documentation to support those startup costs. Your invoices for all revenue received, sales receipt, cash register receipts, tapes, invoices, credit card slips, all loan documents, all contract documents, bank statements, inventory purchase and expense documents like canceled checks and account statements. Again, credit card, sales slips, paid receipts, paid bills, payroll documentation for all your payroll expenses, your payroll tax returns that you file, check images. And this is a big one for small businesses because I work with a lot of small businesses. Please help your accountant out or whoever's doing your bookkeeping. Make sure you have an image of every check that you receive or that you deposit. Okay. Sometimes the bank will include a little image in their online accounting of your bank account, but sometimes they don't. So if you don't have those little images of the checks that you deposit, make sure you keep those. And make sure when you fill out a deposit slip that you include all the details, who paid you, what was it for, as much details as you can, the date, the check number, if you can, of what exactly was deposited. Because a lot of times the bank will just have a blank, like little form deposit slip, and it won't have any details on there. So if that's the case, it's going to be hard for your bookkeeper to know what you actually deposited. And they'll have to come to you and ask you for that information. And if you don't have a record of what you deposited, because maybe you might have deposited 6 checks that came up to a total of $1,000, but each individual check has to be accounted for. So the details of those checks is really important that you keep that information. And as we get into crypto transactions, it's very important that you keep screen prints of any keys that you get for your crypto transactions or the details of the transaction at the time that the transaction took place. Because in a lot of cases, you will not have a custodian or some type of entity that sends you a 1099 form of those crypto transactions. So keeping screenshots so that you can support those transactions later on is very important. Interest income, dividend income, investment income forms that you receive is important that you keep that. Your asset inventory, your depreciation schedules. So these documents should be kept as long as they are needed for the administration of any provision of the Internal Revenue Code. So I summarize that to say, usually you should keep documents for 5 to 7 years, according to the statute of limitations, which statute of limitations are 3 years if you owe additional taxes, 3 years from the date that determination is made. You have to keep records that support that tax return. 6 years if you do not report income that should have been reported, and it's more than 25% of the gross income shown on the return. You know, the IRS requires that you keep it for 6 years. There's no limit on the amount of time that you have to keep it if you file a fraudulent return. So, you know, you need to keep that for maybe 10 or 20 years, who knows? So there's no limit on if you do not file your tax return, because if for some reason the IRS comes back and says that you didn't file a return, no matter when that is, you need to have those records so that you can create a return or dispute the IRS in case they say because the IRS will just make up your income and expenditures based on some records that they might have from your banks or from other transactions that you've done. So in order to fight that determination and show them that that wasn't the case, you need to have maintained all of those records. So yeah, the 7 years to file a claim for a loss from worthless securities or bad debt deductions. So that's why I say from 5 to 7 years, you need to generally keep all your records. And another thing, I mentioned that I was a woman-owned business and a historically underutilized business, which they have incentives to help those businesses get some of the government contracting dollars that are going out the door. So if you ever try to apply for one of these certifications, you may need to go back to your documents from when you first started your business. So when I first started my business, it was in 1992. They didn't have a lot of those programs back in 1992.
Mm-hmm.
But when I had to file to get my certifications, I had to get documentation back as far back as 1992. And thank God that I had an article done on my business in the newspaper, because I started out in Elgin, Texas. So I had to go back and get that document to substantiate that I was in business in 1992. I also had to, thank God I had saved a copy of some canceled checks when I first bought my software and did things back in that time, because I had to provide proof to the state from my HUD certification that I had actually invested in my business myself.
Okay.
So keeping those documents as long as possible is the best thing to do.
Okay. In recent years, especially during COVID, we've seen more and more people trying to find ways to supplement their income, be it selling Avon, selling jewelry, paparazzi, things of that nature. Should those individuals that have those types of side hustles, if you will, file a return as a small business?
Okay, that depends on whether they're doing their business to make a profit or not. So if they're not doing their business to make a profit, it's just something that they really enjoy doing. And they don't have to file a business type return for that or Schedule C, but they do have to file Form 8949 as other income if their income is over $600. So pretty much if you're doing it, if you're making over $600 in revenue, you need to file some type of return, whether it's a schedule on your individual return or a full-blown business return. Okay. And like I said, it depends on whether it's a hobby or not. The thing about hobbies, though, is that you can only deduct expenses for the cost of the goods that you're selling as a hobby. Any operating cost, you are not allowed to deduct at all. So, and you can only deduct expenditures up to the amount of income that you have for hobbies. So there's a lot of requirements in the tax code for limiting the amount of hobby income that you can, deductions that you can claim. And then if you are operating these type of businesses for profit, and you have like a business account for them and you're doing everything for them just like you would a business, then yes, you would need to file. If it's a sole proprietor, if you're an individual, you probably need to file a Schedule C. Or if you are in partnership with somebody, or you claimed an exemption to be an S corporation or C corporation, depending on how the IRS determines your entity type, then you would have to file the appropriate tax return for those.
Okay. And I know starting a small business can be sometimes overwhelming and taxing, and a lot of small business startups especially may think they can't afford a CPA. What are your thoughts on online accounting systems like QuickBooks?
I think QuickBooks is a very good online accounting system. Most of my clients use QuickBooks. They do have an option within QuickBooks for you to invite your accountant or bookkeeper to actually have access to it so that they can help you do the accounting within QuickBooks. So all businesses need to have accurate financial records. That's the bottom line. So an accounting system like QuickBooks helps you to track your financial transactions, and usually these type of systems, they have a mapping function within them. So you can map all of your accounts to the line items on the tax return, which helps you to categorize all of your expenditures in the right categories, get totals for those expenditures for the year, and you can, like in a lot of cases, import that information directly into your tax return. So yes, those type of systems are good to have. They also make your tax preparation a lot easier. It's getting to the point now, because there's so many systems out there, that most CPAs or bookkeepers won't even follow. Well, not bookkeepers, but CPAs or agents with the IRS. They won't even do your tax return if you don't have accurate accounting records. I mean, people used to bring in the shoebox, with all the receipts and documents in there, and expect the accountant to go through all that and separate it and categorize it and total it for you. Those days are pretty much gone. So you need to have some type of a bookkeeping system, whether it's a spreadsheet or an online accounting system, to do all that categorization and totaling for you. Okay. If you don't, your tax fees are going to be a lot higher.
Okay. If you just started and your LLC in November of 2022 and have little to no expenses and no reported revenue quite yet, would you recommend still filing taxes for a small business for 2022, or wait for the next tax return window?
If you are operating your business, even though it might be toward the end of the year, I would recommend that you go ahead and file the tax return, because you're supposed to file a return for every year that you're in business. So you might end up having a loss on that return if you don't have that much revenue, but you're still required to follow the IRS code, which is to file the tax return.
Okay. Should a small business owner have a CPA represent them when requesting capital from the bank or finance banker?
No, they don't have to have a CPA represent them necessarily. They can represent themselves. If the bank or the financial institution requires them to have audited or reviewed financial statements, then they might want to they would have to get a CPA involved, because only a certified public accountant can issue a review statement or audited financial statements. So, but other than that, they don't have to. If they're using QuickBooks or some other accounting software that generates a profit and loss statement or a balance sheet, a lot of times the bank or financial institution will accept that as accurate books and records. So unless it's specifically required, I would say that they don't have to have a CPA to represent them.
Okay. As it relates to business funds versus your personal funds, is it necessary to keep those separate, or are there instances where it's okay to commingle personal and business funds?
It's never right to commingle personal and business funds. No, they should establish separate bank accounts, separate accounting for all of their business should be kept separate from their personal, especially if you're trying to get protection for being sued or being liable for the debts of your LLC. You definitely want to have separate everything, because if you operate and have everything commingled, then the courts are going to consider that to be breach in the veil So, or what they call piercing the corporate veil. And they're going to just totally disregard your business protections, and you will be liable for all the debts of the business. So it's very important to keep the operation separate and the funds separate.
And so with that, is it necessary that one set up an LLC or establish an entity, or is it okay to operate that small business using their personal social security number?
Okay, if it's a very small business, you can use your personal social security number to report your Schedule C. But in most cases, it's not necessary to set up an LLC unless you want to, like I said, get the protections from bad debts or liability from being sued or something like that. But you can just go on the IRS website and request what they call an EIN number, which is really an employment identification number. So you can just get that number. Any business can apply for that, and you can use that to file your tax return under that number. A lot of bank institutions will require you to have an EIN in order to open up a business bank account. So that's another reason why you might want to get an EIN number.
Okay. And many small businesses are operated out of one's home. What are some benefits to running a small business from your home?
Well, you don't have to get dressed and go out to work.
I should say tax-related benefits.
But there are some tax-related benefits. They're not as hefty as most people may think. They pretty much relate to the square footage of your home that you use exclusively. Now, that's the one thing that gets a lot of people, because they might do business out of their home, but it's that area of their home is not used exclusively for business purposes. I mean, you can't do other stuff in that area of your home. But if that is the case, then you can deduct a prorated share of the cost of maintaining the home based upon that square footage area of the home for exclusive business use compared to the total area of your home. And you can deduct, like utilities. You can deduct part of the, it's mainly like utilities and that type of cost for the use of your home as a business expense. Okay. Now, there is a de minimis amount that the IRS has, like a calculation that you can use, where you don't have to have the actual expenditures of all the expenses of the home. And a lot of times if you use that amount, you may not be subject to getting your tax return audited.
Okay.
So
it's a great question from one of our participants. How much should a small business set aside in the annual operating budget for accounting, bookkeeping, and tax preparation?
That's going to depend upon what type of rates that you establish with your accountant or bookkeeper. But also depending upon how many transactions you have. Because obviously, if you're a business that has a lot of transactions, then your fees are going to be higher than for those who only have a few transactions a year. So I would say, I don't know, an estimate maybe 500 to 1,500, somewhere in that range every month. If you are a large business, of course, it'll be higher. But, you're going to have the cost of your software. You have the cost of the accountant to do the work for you. So I think on the low end, it's probably maybe like 500. Some bookkeepers that are not certified, you might could, budget maybe $100 to $200 a month for their services. But if you get a CPA or somebody who's more qualified, like I said, on the low end, it's probably going to be around 500 a month, up to maybe 1,500 a month.
Okay. What are some tax planning strategy tips that you have for small business owners?
Like I said before, looking into whether you can offer your employees or yourself retirement plans. Also other employee benefits like insurance, because you can deduct the cost of those. Let's see, making sure that you reinvest in your business and buy what you need for your business as far as equipment. You may want to expense your equipment in the year that it's purchased 100%, so you could get a full deduction. But like I said earlier, if you have if you're not making a profit that year, you might want to just do the regular depreciation to spread that cost over 5 to 7 years so that you can get more benefit in the years where you do have income or more revenue. Let's see.
Are there,
that's most of them.
okay. Are there specific things that small businesses may miss as it relates to write-off when filing their taxes, like dinners, travel, things of that nature?
Yes, and the recent tax law changes has reduced the ability to claim as much deductions for meals. So you have to be really careful if you're claiming meals expense. Make sure you read the tax law to see what type of meal expenses are allowed, because they really crack down on your ability to claim meals. But you can have travel expenses, but it has to be business related travel. It can be associated with a personal trip, but the main purpose of the trip has to be a business purpose. If you want to stay over another night or something to do some personal, then you can do that and claim the travel. But for the hotel expense for that additional night, then that would not be allowable to be claimed. There's also, as a self-employed person, you would have to pay self-employment taxes. So there is a half, 50% of that tax can be claimed as a deduction for your business. Let's see. Depreciation and mileage or other types of expenses that can be missed. But the main thing is, like I said earlier, that you keep records for those type of expenditures so that you can claim them.
Keep all of your receipts.
Keep all of your receipts. Keep your mileage logs with a business purpose for each trip so that you can claim mileage. That's real important. I have a client who he will never keep his mileage logs, and he always saying, "Oh, let's see, I had 2,000 miles this year." They just make up a number, and it's sometimes the same year after year. It's like, that doesn't fly. I need to get your actual mileage, and there is a place on the tax return that you have to check that you have supporting documentation for the mileage that you claim. So it's really important that you maintain that, because if you ever audit it and you don't have that information, then those costs will be disallowed.
Okay.
There is a new form that the IRS is requiring. Credit cards, or like a lot of people now are using Cash App and some other payment methods in their businesses, like PayPal.
Mhm.
So these vendors are now required to issue a Form 1099-K. And any type of payments that they process for you that are deemed to be business payments, they're going to send you a 1099-K. So the IRS is trying to make sure that they get a better account for all of those payments being done through credit cards and all these other type of Cash App, PayPal accounts that are related to business. Now, they had a delay in sending those out for anything, unless it was over, I think, I forgot the threshold amount, but it was a higher threshold amount. But beginning this year, they were supposed to reduce it to $600. So if you had $600 or more of those type of payments from one of these type of processors, they're supposed to send you a Form 1099-K. But there recently, the IRS has delayed the implementation of that. So some people might get a Form 1099-K this year, and you may not have to report all of those this year because of that extension that was given.
Mhm.
But definitely by next year, all that type of income will have to be included from those 1099-K payment forms from those type of vendors who process those payments.
Okay. This has been great information. For our chat monitors, are there any questions in the chat or from our viewers on YouTube? Or Robin, is there anything else that we haven't covered that you think would be vital to share with our viewers this evening?
Let's see, I think we pretty much covered almost everything. Like I said, with my small business owners, the problems areas that I see with them are, like I said, knowing their entity type. It's real important that you know your entity type. And one of the things about an S corp versus a C corp, if you don't know what that is, a C corp is a full-fledged corporation. And if you apply for an LLC, most likely the IRS is going to declare you to be a C corp. Okay. Most small businesses do not want to be C corps. So if that's the case, you have 3 months from the time that you get that determination to file for an exception to be considered a S corp. So there's a form that you have to fill out and file with the IRS to make that election to be an S corp. So what's the difference between an S corp and a C corp? An S corp is a totally standalone entity from the owners. Those are like big public entities. The S corp files its own tax returns. It pays its own taxes. It has distributions and it has shareholders. So they usually call that like double taxation, because you're taxed at the corporation level and you're also taxed on whatever income you get from the corporation in the form of dividends and things like that. So, and it's also very hard to get out of being a corporation. But a S corporation, on the other hand, you as the owner get paid a salary. Okay. And it's very important that you determine a reasonable salary for you to be an owner, because the IRS is cracking down on S corporations, because some of the owners are just saying, paying themselves a very little salary. If you're like a chiropractor or something like that, and most chiropractors make, $100 or more $1,000 a year, but you're only saying that you're making $20,000 a year, then that's not a reasonable salary. Okay. And you need to document how you determine what that reasonable salary is. You can pay yourself a reasonable salary. You can get the deduction for the employee taxes that you pay yourself for yourself, and the employer taxes that you pay for yourself. And if there's leftover, funds at the end of the year, you can pay yourself a distribution from those funds. And in that case, that distribution is non-taxable. Okay, so that's one of the beauties of having this S Corp status. But it's just important that you make the election in time. You can make the election after those 3 months, but it's a very difficult process to go through to make that election after those 3 months. But you definitely do not want to be a C corporation or a full-fledged corporation.
Okay. We do have another question in the Q&A, and to our participants, if you have any questions that you would like us to address, please go ahead and put those in the Q&A box. How will Cash App and PayPal determine what is a business versus personal expense or payments, and therefore send a 1099-K? For instance, family and friends versus obvious payments to vendors.
Right. So in Cash App, it asks you, are you using this for business purposes? And if you say yes, or if you don't designate it as a family and friends payment, then it will consider those payments to be business payments. The rest of them that you don't designate as family and friends. So that's how I know that Cash App is doing it. Same thing with PayPal. Now you could either have a business account or a personal account. So I don't know all the ways that they're identifying what's what, but I know for those two vendors that they are actually asking you which of your transactions are business versus personal. So it's real important for you to watch that, because I even had an incident where a personal friend of mine from church sent me some money to do something because we were taking up a donation. And she mistakenly didn't check friends, personal and friends. And they categorized that as a business payment for me. I right away contacted them and let them know, no, this is not a business payment. This is personal payment. So if you catch it right away, they will reverse it and categorize it the right way. But yes, that's something that all credit card and payment processing entities are now being required to do.
Okay. Awesome. This has been so helpful and useful information. I don't see any other questions in the chat. To our participants, please be sure you stay on until we have had an opportunity to take the survey. Ms. Smith, this has been awesome. Thank you so much for your time and this information. I know our chapter president is here, and if she would like to have a word, and I'm sure extend her gratitude to you as well.
Yes, and I'd like to thank you for inviting me.
We appreciate it. Thank you.
Thank you, Sarah, Donna, and thank you, Robin. I am a Robin as well. So every time you kept calling your name, I was like, okay, Robin, don't react. But I want to thank you so much for taking the time to with us this evening and sharing this great knowledge. I hope to all of those who are joining us in the webinar and those who are watching us on social media and our YouTube page, that this was some useful information to you. And I cannot go forward without thanking, and I want them to come off of the screen so you can see our lovely co-chairs for our Economic Development Committee, Sarah Avis Gibson and Sarah Sinovia Holt-Rab. They have done an outstanding job with this series over this year. And so we want to, if you have virtual hands, clap them and give an outstanding job for them and the committee that they are leading. this is relevant information. And if you're thinking about a business, you have a business or want a business, and I was listening in because I heard Saradana mention, if you're selling jewelry or something, and I'm sure thinking how I can do something different because the tax man is going to come for me when my 2 teenagers get out of my house and I no longer have them as a deductible. So I'm trying to figure out the plan B so that I can have this. So this was definitely some great information, and I hope that it's been helpful to our audience, and we will continue to think of great ways to bring this type of information and these type of resources to the Austin community as we continue to move forward and make an impact in this community. Robin, thank you for what you've done for us. Thank you to everyone who joined us tonight and gave us your time. Saradana, your narration facilitation was fantastic. And again, thanks to our co-chairs. Thank you.
Thank you, Sora President. And again, thank you, Ms. Smith. Thank you to all of our participants. And again, if you all would please take a moment to complete the survey. The feedback would be great for both us. And if you have any feedback for Ms. Smith as well, we would greatly appreciate that. Thank you all. Have a good evening.
Okay, thank you.
Thank you, Ms. Smith.
You're welcome.
Thank you so much.
You're welcome. Thank you.
Thank you.
Oh, and I forgot to thank Sardanya. Thank you, Dr. Taylor.